Welcome to INSITECT. Today we are talking about cybersecurity in banking and financial services.
This is a huge one. We're really looking at an industry where, the stakes just couldn't be any higher.
Right. And what we're diving into is basically the blueprint for how you secure all these digital channels and, most importantly, keep customer trust in what is a super regulated, risk-averse industry.
And that's the fundamental tension, isn't it? The sources we looked at make it really clear.
It's that balancing act.
It is. It's this constant push and pull between really strong data protection, fraud prevention, and the sheer speed that modern finance just demands.
You can't slow things down. You can't introduce friction.
Not at all. And the big takeaway from the get-go is that there's no single solution here. Security in this world is a layered thing. It's network architecture, it's access controls, encryption, operations. You have to get it all right all the time.
Okay, so let's start with that foundation. Why is this so much more than just an IT problem? Why is it, existential for these banks?
Well, you said the magic word earlier.
Yeah.
Trust. The currency of banking is trust. So when a cyber attack is successful, it's not just, a line item of financial loss.
That's a chain reaction.
It's a massive chain reaction. You've got immediate, expensive regulatory investigations kicking off. You have lawsuits. And then the really damaging part, the long-term erosion of the brand, that trust that took decades to build, it can vanish.
And if customers don't trust you, they're gone.
They're gone. Simple as that.
And keeping that trust is getting harder because the attack surface has just exploded, right? All the online banking, the mobile apps, the open banking APIs.
It's not a castle wall anymore. You're not defending one single perimeter. It's thousands of constantly moving entry points.
So that old model is it's obsolete.
Completely insufficient. Your defense has to be embedded everywhere. It has to be granular, and it has to be adaptive.
Which brings us to the big stick, really, the regulatory pressure. You have this whole alphabet soup of compliance frameworks, ISO 27001, PCI DSS, NIST, GDPR.
And these have real teeth. The penalties can be staggering. They're often calculated as a percentage of global revenue.
But here's the interesting point the sources make. Being compliant doesn't actually mean you're secure.
Exactly. That is the critical distinction. Compliance gives you a baseline. It covers the known, common stuff. But it will absolutely not protect you from a determined, sophisticated attacker.
So you can tick every single box and still be completely vulnerable.
Yes. Which is the perfect pivot to the threat landscape itself. You have to know who you're fighting.
And the old stuff still works, right? Phishing is still a huge problem.
It's depressingly effective.
Yeah.
Because it's not just generic emails anymore. It's spear phishing. It's hyper-personalized, using information they've gathered about specific employees to make it look totally legitimate.
Targeting people with the keys to the kingdom.
Precisely. And the scale of the attacks on just, regular customers. The sources say financial firms are seeing thousands of account takeover attempts every single day.
Thousands a day. Wow.
Yeah. Then you've got ransomware. And that's an attack on the bank's ability to even function. If your core systems are locked up, transactions stop. The bank just stops.
So backups are everything.
It's more than just having backups. You have to have offline, totally segregated backups.
Right.
And this is the key. You have to be testing your recovery procedures constantly under pressure. The real measure isn't the backup file, it's how fast you can restore.
Right. And that covers disaster recovery and fraud prevention at the same time.
Okay, let's get to the really scary stuff, the advanced persistent threats, the APTs.
What defines an APT is patience and resources. These aren't smash and grab jobs. These are campaigns that can unfold over months, maybe even years.
Years.
Oh, yes. They get in, they map your systems, they move laterally, very slowly, expanding their access, just waiting for the right moment. The assumption has to be that they're already inside your network.
That is a terrifying thought. And that makes the next threat, supply chain compromises, even more insidious. It does, because the attack comes through a channel you're supposed to trust. An attacker injects malicious code into a vendor's software update, for example.
So they're coming in through the front door, basically.
Exactly. It's so hard to detect because that vendor product already has permission to be there. It just walks right past your perimeter security.
And with all the fintech partnerships, the number of those vendors is just growing and growing, which means more API vulnerabilities.
Absolutely. Every new API is a potential new doorway. If it's not secured perfectly, it can leak data, or even worse, become a backdoor for a much bigger compromise.
And we can't forget the insider threat. How do you stop a malicious employee without making life impossible for everyone else?
That's the paradox, isn't it? You have to be able to tell the difference between someone just doing their high-privilege job and someone who's stealing data. It's incredibly difficult.
So with all those threats, how do you build a resilient architecture? The sources are really clear that network segmentation is the absolute starting point.
It's all about isolation. You build these secure zones.
Yeah.
Your core banking platforms, your payment processors,
Yeah.
they live in a highly restricted area. So if an attacker gets a foothold on, say, a public web server,
They can't just jump over to the really important stuff.
that's the idea. It stops that lateral movement.
And then there's this next level, microsegmentation. If segmentation is building walls between departments, is this like putting a safe in every single office?
That's a perfect analogy. It shrinks the blast radius down to almost nothing. A compromise is contained to one single application, not the whole network segment. It just slows attackers right down.
Okay, networks locked down. What about access control? Because it seems like the people, especially third parties, are often the weakest link.
Vendor risk is a massive vector, so you need dedicated connection points for them. You need to enforce the principle of least privilege, give them access to only what they need, and you monitor everything they do.
And for your own admins, the sources talked a lot about privileged access workstations, or PAWS, and jump servers.
Right. Think of them as mandatory security airlocks. An admin can't just manage a critical database from their everyday laptop that they use for email.
Because that laptop could have malware on it.
Could have a keylogger, or anything. They have to log into this clean, hardened, heavily monitored system first. It separates their normal work from their privileged work.
But isn't there a risk that all these extra steps and layers just become so complex that people try to find workarounds and create new security holes?
That is a huge concern. It's a real trade-off, and that's why the most advanced approach is something called just-in-time provisioning, or JIT.
Okay, what is JIT? How does that work?
It's actually really elegant. It completely gets rid of permanent admin accounts.
So no standing privileges.
None. When an admin needs to do something, they request access. The system authenticates them and creates a temporary account with the exact permissions they need for maybe 30 minutes. After that, the account literally destroys itself.
So the window of opportunity for an attacker to steal those credentials shrinks from, well, forever down to just a few minutes.
It's a game changer.
Okay, let's shift to protecting the data itself. Encryption is a given, obviously, but the sources stress that the implementation is everything.
It is. I mean, we have great standards like AES 256 for data at rest, TLS for data in transit. But the thing that keeps security chiefs up at night is key management.
You can't leave the keys to the vault right next to the vault door.
Precisely. If your key storage gets compromised, your encryption is worthless. So you store keys separately, usually in special hardware security modules, and you rotate them on a strict schedule.
And to prevent data from leaving in the first place, you have data loss prevention systems, DLP. What are they looking for?
They're like silent watchmen on the network. They're constantly scanning all traffic, looking for patterns that look like credit card numbers, personal IDs, that kind of thing. And if they see it trying to go somewhere it shouldn't, they just block it.
Okay, so that's protecting the data. But in banking, security has to be tied directly to fraud prevention. How do you do that without driving legitimate customers crazy?
You do it with behavioral analytics. The system quietly builds a profile for every customer.
Right.
Where they log in from, what devices they use, typical transaction sizes.
So it learns what's normal for me.
Exactly. And when something deviates from that norm, like a sudden login from a new country followed by a large transfer attempt, it flags it instantly.
And that triggers risk-based authentication.
Right. You don't bother the customer with extra security for low-risk things like checking a balance. But if they try something high-risk, like adding a new person to pay, then yeah, you ask for that extra multi-factor authentication.
It's about finding that balance between security and user experience.
It has to be.
Now, with biometrics, which are so convenient, the sources mention a specific technical need, liveness detection. Why is that so important?
It's non-negotiable. The system has to know it's a real live person in front of it. Not a photo, not a recording, not a fancy mask. Without liveness detection, the whole security promise of biometrics just falls apart.
There's another control I thought was really clever, velocity checks.
Yeah, those are great. They work on the assumption that a compromise will happen, but it gives you a window to react.
So if my account gets taken over, there's a limit to the damage they can do quickly.
That's it. The checks limit how many transactions and for how much money can happen in a short period. It prevents an attacker from draining an account in, 10 minutes flat.
That seems really smart. defending against the consequences, not just the breach itself.
Yeah.
Okay, finally, let's talk about the operational side, the people. Starting with the Security Operations Center, the SOC.
The SOC is the 24/7 nerve center,
Hmm.
and they work hand in glove with the fraud teams we were just talking about. They're taking in a flood of data from a SIEM platform.
A security information and event management platform. The sources said they process billions of events a day. How do you find the signal in all that noise?
The SIEM uses correlation rules and threat intelligence. Its power is connecting the dots. It might see a failed login here, a weird password reset request over there, and then a transaction that got flagged by a velocity check.
And none of those things on their own would be a major alarm.
Right. But the SIEM puts them together and sees the pattern of a coordinated attack.
Which then triggers an incident response playbook. And the emphasis here is that these have to be tested.
A playbook that's never been tested is just a document. It will fail in a real crisis. And the playbooks have to be different for a tech incident versus a fraud incident. One is about restoring systems. The other is about reversing transactions and calling law enforcement.
And the final piece is governance. Shifting security from a checkbox exercise to a core business priority.
Which starts at the board level. The CISO, the Chief Information Security Officer, has to have a direct line to the top, and then you need to build the culture.
Through security awareness training, turning every employee into an active defender.
Yes, and you test them with simulated phishing attacks to keep them sharp. You also create security champions people embedded in the business units who make sure security is baked into new projects from day one, not just bolted on at the end.
So when you pull it all together, what's the ultimate lesson from this deep dive?
It's all about integration and adaptation. You have to combine those strong technical controls like microsegmentation with smart adaptive strategies like behavioral analytics. You have to stop the data leak and the fraud at the same time. And the investment really does pay off, not just in avoiding cost, but in building that customer loyalty that the whole business depends on.
You know, the source material mentions that compliance sets a baseline but doesn't guarantee security. That leaves a pretty big question for you, the listener. If the adversaries are planning and running these sophisticated campaigns over months and even years, what does that say about our regulatory frameworks, which are, at best, designed to fight yesterday's threats?
It's a constant race, and the attackers, well, they always have a head start.
Thanks for listening. We will continue to talk about security and technology. See you in the next episode.